In this video, we're going to go over 4 highly anticipated IPOs of December 2020. This year has been absolutely crazy. We saw the overall market decline more than 35%, and since the March lows, we have seen nothing but a continuous bull market reaching new all-time highs in the Dow. And in this month of December, to close out 2020, we have 4 highly anticipated IPOs from companies who are respective leaders in their industries and that are expected to grow moving forward. For each of these companies, I'm going to go over their IPO details, take a look at the company's most recent financial position, what we expect for them moving forward, and how we think the company and their business plan is going to grow over the next 2, 3, 4 plus years. These are all companies expecting to go public in the month of December. We don't have any confirmed dates or share price for any of the 4 in today's video, and these are some major names that are expected to grow at a massive rate once their shares hit the public market. If you're new to the channel, please hit the like button and subscribe. We post daily videos about the market, going over different stocks you should buy or sell, and always taking a look at any major market news and headlines. In this video, we're going to focus on the big IPOs in December 2020, and we're going to jump right in to the first major company, which is DoorDash. The food delivery company has seen a massive growth because of the pandemic, and they have filed for their IPO and plan to hit the public market sometime in December 2020. We don't have an exact date or an exact share price for this company. All we know is they plan to go public on the New York Stock Exchange under ticker DASH or DASH. So because of the pandemic, traditional dine-in restaurant style of eating has been shut down. Restaurant sizes have been reduced, and there are a lot of limitations on where and when you can eat within a public restaurant. But delivery has grown in popularity, and it's a trend that is expected to continue to grow over the next 3 to 5 years. With people spending more time in place, more time at home, less time going into the office, less time going out to get food, delivery to your house has been a growing trend, and DoorDash is the market leader in that industry and is expected to benefit very highly moving forward. So they filed for their IPO, and we're going to go over some of the details regarding the company, their current financial position, and what we expect for them moving forward. So they're actually the market leader in the food delivery app space within the United States. So far, in the 9 months ended September 30th, 2020, they have revenue at around $1.9 billion, which is up massively from only $587 million during the same 9-month period in 2019. So revenue has grown substantially, almost 4 times in the same 9-month span. And as the revenue has grown, DoorDash has also narrowed and reduced the net loss for that same 9-month period. So far, in the first 9 months of 2020, they had a net loss of $149 million, compared to back in 2019, where in the first 9 months, they lost over $533 million over that period. So the company has been growing at a massive rate, and like I mentioned, they are actually the leader in the food delivery service. They have over 1 million dashers, or the delivery drivers, and more than 18 million customers. And one great aspect of the company is their per month subscription fee, where they have over 5 million customers paying $10 per month for their Dash Pass service, which for some different restaurants they offer free delivery. When the shares will hit the public market, they're offering 3 different classes, very normal, nothing too crazy with regard to how they're going to structure their shares. So what the company is expected to do is grow and dominate. With this new stay-at-home economy, with the pandemic growing, and with the fact that remote work is growing in demand, and more people are going to be working and spending their entire lives at home, traditional in-person dining is not expected to recover to back where it once was ever again. People spending more time at home, they're going to order in more. That's just how the way the trend has been showing, and consumer spending habits are reflecting that moving pattern that is expected to only accelerate over the next 6 to 12 months. So the company seeks to join their competitors on the public market. They led the US market share with around 49% of meal delivery sales, beating Uber and Grubhub, which each make up respectively around 20% of the industry. So they plan to go public in 2020, and their last valuation was around $16 billion, when the company has raised in total so far $2.5 billion. They are the latest gig economy company to go public, and I think this will be a very interesting company when it hits the public market that will see another massive increase in share price. I don't see delivery going anywhere anytime soon. I think the new convenient way of living our lives from home is only going to grow in popularity, and DoorDash is very well positioned to dominate that respective market. If we look ahead, they also have some plans for the future, which actually takes away the delivery drivers. They have plans for autonomous and drone delivery technologies that could have an impact on the food delivery industry moving forward. They have partnerships with companies like GM in order to kind of test that out moving forward. So they also have invested and they expect to continue to invest in the research and development related to all their autonomous and different drone delivery technologies. Other major e-commerce platforms are working on drone deliveries because it provides quicker, more efficient delivery directly to the front door of people's homes, and DoorDash is innovating and plans to work on that very soon. We don't know exactly when that's going to come in or when the drone technology is actually going to be put in place, but it is a good idea to note that they have plans for the future with regard to research and development into growing technologies. So this is a company that hits the public market sometime in December 2020, growing in popularity as the food delivery space as a whole continues to grow, being a market leader, very interesting company to take a look at once their shares hit the public market. The second major company expected to go public next month is Airbnb. So they filed for their IPO and they operate, of course, within the travel sector. Airbnb is a marketplace for different consumers to be a host and rent out either a bedroom, an apartment, a condo, whatever it may be, to other travelers that want to come and rent a stay. And you can see they're more unique, different type of atmospheres away from the traditional hotel travel. So this is a company that, although the pandemic has really shut down their industry, that is expected to boom moving forward. This is because an Airbnb stay is more unique. You're not in a hotel with thousands of different people coming in and out every single day with hundreds of staff and a lot of room for contamination. Usually an Airbnb is a more unique, private, personal rental where you're renting a room or an individual apartment or condo from another individual and you're the only person staying at that point in time. So there's a lot less risk of transmission because you're not compact in a hotel eating in a common space with hundreds of different people in and out every single day. So this is a company that has been growing in popularity. It is somewhat cheaper than a traditional hotel stay and provides a more unique experience. So the company overall has been growing at a massive rate and is expected to continue to grow moving forward. If we take a look at some of the stats for the company, they have over 5.6 million listings across the world. They operate in over 100,000 cities in more than 220 countries. More than 4 million people are hosts on the site, which means they own a property that they are putting up for rent for travelers to come and stay in. And they have served more than 8 million guests. And the average host has earnings of over $7,900. So this can actually provide some nice side income and can actually be a nice, benefit for the different hosts performing and operating within the site. And although the travel industry has been hit hard, before the pandemic, Airbnb was growing at a fast rate. So one thing that was attractive about the company was that, of course, before this hardship in 2020, their revenue was growing rapidly. From 2017 to 2018, we saw revenue go from $2.6 billion up to $3.65 billion, which was a 40% year-over-year growth. Then from 2018 to 2019, we saw revenue hit $4.8 billion, representing more than 31% annual revenue growth. But of course, in 2020, there has been a decline as of late, but the company has been held up, and I think revenue will bounce back once the travel industry starts to pick up. And I think even before the company sees a full recovery, I think Airbnb platform is going to recover faster than traditional hotels. Like I mentioned earlier, I think it's a safer way to travel for a cheaper price, and I think Airbnb hosts, the more personalized service you will get within renting one of their apartments or condos, I think is only going to kind of boost investor and consumer confidence over the next few months when it comes to travel. Taking a look at their net income numbers, there is a slight red flag. So before, in 2017, they had a net loss of $70 million. Then they improved, and in 2018, their net loss was only around $17 million. But in 2019, their net loss gracefully increased, and they lost more than $674 million, which is a massive, massive decrease. And of course, in 2020, we're not expecting anything better. In the first 9 months of this calendar year, they lost close to $700 million, which of course is a massive increase in net loss from previous years. There is still hope of profitability. Moving forward, we're expecting profits from the company, and in the actual third quarter of 2020, they were profitable. So although on the calendar year they are still down, in the one single quarter they showed a profit of $219 million. So although we aren't expecting a profit in the fourth quarter, at least it's a good sign to show that even during a pandemic, they can post profits in one of the 4 quarters throughout the year. So far, we don't know the exact date on when the company will hit the public market or for what amount of dollars per share they will be traded at. But we do know they will be traded on the NASDAQ under ticker ABNB, which I think is a great representative of the company. And so far, I think this is one of the most interesting companies to take a look at. I think before the pandemic, their revenue growth numbers were absolutely astronomical, and they were actually very close to being profitable over the calendar years. Of course, as of late, net income has been hit very hard with increased costs and decreased revenue, but I think the company, like I mentioned earlier, is going to recover much faster than the overall industry. With Airbnb being a safer way to travel, I think it's going to be more grow in popularity, and I think it's going to outperform the traditional hotel space. Because it's expected that business travel is going to decrease by more than 50%. And Airbnb was not into that market. So I think the traditional hotel space, which really catered toward business travel, is going to be absolutely hammered moving forward and may never see a recovery. But Airbnb was always focused on individual consumers and not business travel. So I think that's only going to grow because people have been cooped up for so long in their own homes. I think once it's safe to do so, they're going to want to travel like crazy. And Airbnb is a platform that is growing in popularity and I think will actually be a success once they hit the public market very soon. The third major company is Roblox. They filed for their IPO and, like the others, are expected to hit the market in December of 2020. This video game company has absolutely grown tremendously because of the pandemic. With kids being forced to stay at home, Roblox provides a platform of different games that are tailored towards the younger generations that is growing rapidly over the past few months. So the revenue and free cash flow numbers for this company are through the roof, and they're going to be traded on the New York Stock Exchange under ticker RBLX. So overall, the company has grown dramatically. Some key highlights is that they have over 31 million daily active users, more than 22 billion hours engaged, revenue of over 589 million, $1.2 billion of bookings, and 345 million of operating cash flow. So the company has more than 7 million developers, and hours engaged have grown 122% over the period of the first 9 months of 2019 compared to the first 9 months of 2020. And you can see hours engaged continue to grow quarter over quarter. Revenue overall for this video game company is up more than 56% from 2018 to 2019 and has grown 68% in the first 9 months of 2020. Overall, the company has free cash flow from 292 million in the first 9 months this year, and they continue to grow. And overall, they have 810 million of cash on the balance sheet, so their short-term financial position is very strong. Net loss so far this year has been around 200 million. Overall, their share structure, again, nothing too crazy. Some key financial metrics, of course, is that the big amount of cash on their balance sheet of over 810 million. Net loss has been seeing a slight increase because of the increased operations, but free cash flow was 35 million and 14.5 million in 2018-2019, but has grown dramatically to 292 million so far in 2020. And if you have asked the $200 million net worth individual, Kevin O'Leary, the investor from Shark Tank, his favorite financial metric is free cash flow. And you can see this company, Roblox, has been seeing a tremendous increase in that free cash flow metric. Of course, the video game sector as a whole has been growing in popularity, and this company has been dominating that industry. So I think this is a very interesting company. They offer a free platform, but there's a lot of in-game purchases that are made by all the users. And overall, I think Roblox could be a hit. I think they have a nice different diversification. They aren't just one single game mode. They have different game modes within their platform and different video games as a whole within their ecosystem. So another company to keep your eye on. Shares are going to be traded under ticker RBLX. And overall, the company has seen a massive growth from the pandemic, and the entire video game sector has been pushed years ahead because of the stay-at-home economy. And once again, similar to DoorDash, similar to Airbnb, this is a company that's actually benefited because of the pandemic. And I think moving forward, this is a company that may see some strong future growth. But of course, there is a lot of risk in this type of industry. Video games are trends. Some grow in popularity, some decrease in popularity. So Roblox, who knows how long they're going to be a leader in the industry. It may only last a year or 2 years before the demand for their games dies off. So this is one that I believe is a little more risky compared to DoorDash and Airbnb, but it is a highly anticipated IPO, and we had to discuss the current numbers and the expectation for the ticker to be traded on the market sometime in December. The fourth company that plans to go public is the discount e-commerce platform, Wish. They focus on lower cost, more affordable goods that can be shipped that may take a little bit longer, may not be the full brand names, but come at a cheaper price tag. So they plan to go public in the end of 2020, and we're going to take a look at some of their key financial numbers. Similar to the first couple companies we've taken a look at, This company plans to directly compete with some of the big names such as Amazon, but they are positioned slightly different. The founder says, "We have built Wish to serve the consumers who favor affordability rather than brand and convenience, and because they believe this is an underserved market in the e-commerce space. So instead of focusing on the quality of goods and the convenience of the delivery of those goods, they're going to focus on affordability of the products on the platform." So far, Wish has reported $1.75 billion for the 9 months in 2020, which is up from $1.33 billion during the same period in 2019, a growth rate of 32%. Before that though, from 2018 to 2019, revenue has only grown 10%, so they haven't seen as dramatic as a total revenue growth compared to the first 3 companies on the list. But overall, their net losses have been stabilized. So they lost $247 million in 2017, $208 million in 2018, $136 million last year, and so far in 2020, they've lost $176 million. So not yet profitable, but this is one of the most downloaded and most actively used e-commerce platforms in the world. Wish has said that they have over 100 million monthly active users in over 100 countries, which has seen a massive growth from its previous report of only 70 million. So they have over 100 million monthly active users for their platform, which is absolutely incredible. And they have more than 500,000 merchants signed up to sell on their platform, which has grown their platform to have over 150 million different products. A lot of their merchants are based in China, but they continue to add more sellers from the United States in their platform starting back in 2019. So overall, the traditional e-commerce space has been growing at a massive rate because of the pandemic, and this is a service and a platform that is expected to grow moving forward. A little bit different because they're focused on lower cost goods, and you can see I just made a free account to take a look at the platform, and you can see lower cost goods right away, $1, $4, $3, $1. I haven't even ordered from Wish before, but you can take a look just at the platform right away. Much cheaper, 99% off their advertising, $195 back down to $1. I really don't believe that, but you could see here some lower quality, cheaper items for a lower cost, and we will see how this company hits the public market sometime to close out this year. So those were 4 different companies all planning to IPO in 2020. With the new SPAC world we're living in and some traditional IPOs who have seen some rapid growth this year, these are companies, when they hit the public market, I'm expecting to see some increase. I think of these 4, DoorDash and Airbnb have the best chance to survive long term. I think Roblox operates within a sector that is based on trends that may not see sustained long-term growth. And I think Wish, the products that they serve on the platform, I don't think are going to allow them to stay as a consistent brand. I think people are going to want and actually provide the convenience factor that Wish does not provide over the longer term. So those are just 4 companies that are going IPO. Let me know down in the comments which ones you like and which ones you will be taking a look at.